Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the major forex pairs, starting with the dollar index. This video is for educational purposes only and it is not a financial advice. So what we are looking at is the daily chart of the US dollar index futures. If you recall from our last video which we had done, we had actually marked a kind of a line in sand which was around 104.18. That is the level which we were watching, and what we said was if the price closes above this level on 2 consecutive daily bases, then we have a pattern formation of an ABCD moving higher. First of all, it's going to test around our long awaited 106.07 level. However, price closes below that, then weakness in the US currency is more something to be expected. So what we have seen over the last week trading is we have indeed seen weakness come in. That is since the level which we reached was 105.55. This was this ABCD completion, and we did mention that actually. And what we have seen is on Wednesday 15th of March, because of the crisis going on with in the banking industry, a flight towards quality and perhaps a big money moving into US dollars. So we saw a big candle, but over the last 2 days we have seen the US dollar actually getting weak, perhaps because of the massive actions taken by the Federal Reserve, what they have done with the treasury bonds being held by the US banks. I'm not going to get into the details, it's another video. Okay, so what we are looking at is a potential pattern. If again this big candle top is not taken out to the upside, I think the pattern in play is this, where we have this ABCD right at the 78.6% Fibonacci retracement coming around a 101.80 level. So 101.90 to 101.80 is the level which we are watching on the downside for US dollar index, given that the high of this pattern from here, the ABC point, is not taken out to the upside. Now let's quickly take a look at the forex. Before I do that, let's also take a look at on a weekly basis, longer term, because the weekend, so we can do a slightly longer video. Apologies for that. So what we are looking here is again, this was the 38.2% Fibonacci retracement. So if on the daily chart, if our analysis is correct, then on the weekly chart we have the 61.8% retracement coming a little bit lower, around 99.16 level. So that is something which we will have to watch on the weekly chart. On the monthly longer term chart, so I'm not going to go into the details of this chart, there's a separate video done for it. You guys can actually have a look at that video. I'll try to also post a link to that. So what we think is, based on the historic pattern, that US dollar might have topped longer term, because if you go back right into 1992, you can see it took about 10 years for the high to reach, and this time around it's been about 12 years. So based on that pattern and the symmetry in the market, if our analysis is correct, the US dollar might have dropped longer term. However, it doesn't mean that we cannot have rallies in the US dollar. In fact, we can have some really strong vicious rallies to the upside, because that's usually what happens in a bear market. Look what happened around here in the late 1990s and beginning of 2000. We have had several really good rallies in the US dollar. Okay, so let's take a look at the EURUSD forex pair. So let me go to the daily chart. So here again, this is the inverse of pretty much the inverse of the US dollar index, and the reason is about, I believe, 51% of the US dollar index is actually EURUSD. So here, if our analysis is correct for the dollar index weakness, then we're going to see strength in the euro currency, and the key levels to watch here are the 1.0833 and 1.092. so where you see these brown lines, roughly these are the regions to watch for the upside. If we take a look on the weekly basis, so on the weekly basis, look, the price did close above the 20 week moving average. However, it's still below the 200 week moving average, so it's kind of consolidating this area. However, the momentum remains on the bearish side just based on the moving averages. However, on the upside here, the 61.8% retracement comes around 1.128 level. So that's the level on the weekly chart. On the monthly chart, yeah, I mean, it's just I think we'll stick to the daily and weekly for our analysis for the moment. Okay, so the next chart we're going to look at is the GBPUSD. So there you go, guys. This is something we were looking for. Perhaps this currency to move down to into support level around 1.166 to 1.1645, where we had a combination of Fibonacci ratios coming together. However, what it appears is that this currency is moving in a range, and because of this ABCD pattern which we see in the blue line here, it might have actually bottomed around 1.1785 level. And what we are looking at now is that the currency tested the 61.8% retracement coming from this high right here. It is testing it for the third time, for the first, excuse me, yes, it is for the third time. So this is the first time, then the second time, and this is the third time. It might move back into the range a little bit before trying to make another attempt to move higher. So where we see this shaded region, that's the kind of area which we could anticipate on the higher side, taking the stops out here, reaching to the 78.6% Fibonacci retracement. And after that, we'll have to evaluate whether it's moving in an ABCD formation higher, where it's going to actually attempt the resistance right at the 1.244 level, which is the double top formation in this region. Let me actually try drawing it for you so that's a little bit easier to see here. That's quite also possible that this is actually moving in an ABC formation higher, but we'll have to wait for confirmation further. Okay, so let's take a look. This is the weekly chart, and here what we are looking at is in this scenario, the currency has found a support right at the 38.2% Fibonacci retracement, and in fact what it has also done is it has formed a double bottom right here. So what we can see is a bottom here and a bottom here, and so it's a double bottom in my books. And what we have is the 1.618 expansion of this range coming right at the 1.2826 level, where is also the 200-day weekly average hovering around that level. So that is the potential area to watch on the weekly basis, if on daily basis our upside targets are taken out to the upside. All right, so next, guys, we're gonna take a look at the USDJPY. So this USDJPY is the most interesting one, because if you go back a week or maybe a week and a half ago when we did the video, in that we had looked at this pattern formation, and we had come up with a zone. Watch this zone, and at that moment I think the price was reaching close to this region, but it had not really moved into that zone yet. So why we picked this zone? Because of this thing, that it had formed an ABCD pattern formation right at the 50% level, where it found really good support. The price in this ABCD, like if you look at, it has always found resistance either at the 50% or the 38.2% level, and then 50%. And if our market symmetry analysis is correct, then what it meant was that it was going to find a resistance either on the 38.2% retracement level or the 50%. That's why we had this zone. And what it did is, in fact, it found a resistance right at the 38.2% Fibonacci retracement, and it has moved significantly lower. One more thing to actually watch is that when in this ABCD, like, it found resistance at the 38.2% retracement, the move lower was much larger. So let's move to the weekly chart. So here on the weekly chart, a little bit different picture. Here what we are looking at is that if this low, which assuming that we are in an ABCD pattern formation. So let's say this is our level A here. Then we have this point as our point B, and then we have this C. Then a one-to-one projection takes us to D point here, and this D point is in confluence with the 78.6% Fibonacci retracement right from the 9th of March 2020 lows. So you know, when the COVID crisis was COVID low, in fact. So it's a significant point, and if our analysis is correct, and if indeed it is moving in an ABCD pattern formation, and this low is taken out, then we could see the yen strengthen significantly against the US dollar, which in other words means significant decline in dollar index. All right, guys, so the next one we are going to take a look at is the Aussie dollar. So this Aussie dollar is actually, you know, significantly related towards the commodity. If this currency begins to pick up, then perhaps as a proxy we could imagine that commodities such as rare earth commodities, gold, platinum, copper, etc. might also, you know, we need to pay attention because they could be moving higher in price as well. So what we're looking at in terms of this currency pair is, I'm not going to go to the entire detail of this pattern formation. You can watch that in some previous other videos. We were sitting right at the 61.8% Fibonacci retracement when we had done the video last week, and we said, okay, we had a few days here, so really carefully we had to watch this level, whether it was going to get broken down to the downside, which did not happen. And what in fact has happened is, I would say it's more of a consolidation right into this mother candle here, and it is right at the top of this candle here. It's not the top of the wick, but of the body. So what is really important is whether the price is actually going to break out of it. Then the next level that we really are watching is 0.6792. That is the 38.2% Fibonacci retracement from this low. So here, guys, what will happen is that if this market is really strong and is likely to push higher because of the anticipated weakness in the dollar index or in the USD currency, then this resistance level should be taken out on consecutive daily basis, and that would give us a really good indication that in fact it could be, this currency pair could be moving in an A, B, C, D larger pattern to the upside. So let's take a look at that on our weekly chart. So what we have seen in the weekly chart is the price is right into the 61.8% and 78.6% Fibonacci retracement. I've taken the extreme low, but in such cases when we have like big wicks like this, it could really be a liquidity thing where even just one trade could have taken it down there, because that's how the price was delivered in terms of you know, someone wanted to sell, but someone only wanted to buy at this level, and that's how the trade got filled. So it's possible that this 78.6% Fibonacci retracement might have already happened if we were to redraw it, let's say from this level, which is this candle low. So I'm gonna pick this level because it looks like if the price was not delivered properly, in other words, in an inefficient manner, then there was a retest of it where significant buyers came in and there was more interest in the currency and the price moved higher. Something similar can also be argued for this top, but for now I'm just gonna assume this as the low. So in this case, what we looked at the daily chart, if that all of that is true, then what we could be looking at is an ABCD pattern formation right here, which will take us to these highs around here. And if we draw a retracement, so here, oops guys, why is my window not okay, here we go. So these are the two ratios we try to look at. Then what is happening is, guys, so guys, I've taken this low, right, this high, excuse me. If our analysis on the daily chart is correct, and assuming it's moving in an ABCD pattern formation, then it could actually go as high as spot 7522, which is significantly higher than where it is right now. It's not gonna go there in next week or something. It's gonna take several weeks, months for it to reach there, if in fact our analysis is correct. So guys, this is what we are looking at for the forex currency pairs. Do you excuse me that this video is getting a little bit longer, so I'll just cut it short here. If you guys like our analysis, how we look at the forex markets using the pattern recognition and Fibonacci ratio retracements and projections, and then please do subscribe to the channel. If you like our technical analysis doing it this way, you find it clear and concise, please do like the video. That way I know that people find the video from an educational perspective interesting and educational, and it just encourages me to keep on producing more videos for you guys for educational purposes only. Thank you very much. Good luck and good trading.